Good morning, traders. Today is 13th of May, and welcome to your morning market check-in. Let's run through the key movers today, from the US dollar and oil to gold and the Aussie. And let's break down what's driving the action. So let's start with the dollar. The dollar index surged to 101.98 in early trading, which is the strongest it has been in over a month. That move came after a big weekend headline, which is the US and China issued a joint statement following trade talks in Geneva. The two sides agreed to ease tariffs for the next 90 days when the US will bring its tariff rate on Chinese goods down to the basic rate, which is the 10%, and while Chinese is also suspending its retaliatory tariffs. And this was a clear signal to the markets, which is the trade war is finally cooling. That is a reduced recession fears and also added momentum to the dollar, especially with the Fed still holding a hawkish stance. And Powell made it clear last week, which is there's no rush to cut rates, and especially with short-term inflation picking up from the tariffs. And that helped push the US Treasury yields to their highest level since mid-April and gave the dollar another leg up. And from a technical standpoint, the dollar looks strong. It is sitting above the key moving average. RSI is over 57, and the momentum is also building. If it holds 101, we could see a push towards 102.37, but if it drops below 100, things could also shift quickly. So next up, oil. WTI crude oil is up nearly 3% and trading close to $63 a barrel. And again, it is trade optimism fueling the move. With the US and China de-escalating the tariffs, the markets are feeling more confident about the global demand, especially from the world's top two oil consumers. But it is not all upside because OPEC is planning to boost output in the upcoming months, and there has been some progress in the US and Iran nuclear talks, which could eventually add more supply to the market. And technically, oil looks constructive. It broke back above the $60 level, and RSI is in neutral territory around 52. And the MACD just flipped positive. And if momentum holds, we could see a crude test at 63.38, maybe even 65.41. But if we slip back below 60.7, the rally could stall. So let's talk about gold. Gold is under pressure today, down almost 3% to about 32.07 an ounce. That is a 1 week low. The sharp drop came as the safe haven demand cooled. With risk sentiment improving and tariff tensions easing, the investors are rotating out of gold and into risk assets. Add in the Fed's hawkish tone, and you have got even more downside pressure. Higher yields reduce the appeal of non-yielding assets like gold. And on the chart, gold is losing steam. RSI has slipped to 48, and MACD is fading. And the prices are hovering around the 34-day moving average. Key support sits near 3200, and if that breaks, we could see a move towards 3164. To reverse course, bulls need to push back above 3270 and eventually reclaim 3300. And finally, let's look at the Aussie dollar. Australian dollar pulled back slightly today, trading just below 0.64. But overall, it is holding up well, thanks again to the boost and sentiment from US-China trade progress. And Australia's economy is closely tied to China, so any improvement in China's outlook tends to lift the Aussie. Markets are also awaiting for the key Australian data, including the consumer confidence and business conditions, both out tomorrow. This could shift the sentiment heading into the midweek. And technically, the pair is still trading into an upward channel. RSI is hovering around 50, showing neutral momentum, and we are just below the 200-day moving average. Resistance is up at 0.6456, then 0.6514, and support levels to watch is the 0.6359 and 0.63. So to wrap it up, the markets are riding high on US-China trade optimism, and the dollar is gaining, oil is climbing, gold is retreating, and the Aussie is holding steady. Momentum is building, but the key levels ahead will be critical to watch. So trade smart, and I will catch you in the next update.